Testing, testing, testing. 1, 2, 3. Testing, 1, 2, 3. Cool, yeah. How's your mum? All right, who's alive? Too much distortion? Yeah, all right. Let me turn the mic down for those who are sensitive. How's that, Timmy? Got it, Timbo? Much better? Yeah. Maybe if I stop spitting and yelling, huh? Like a sailor? All right, good morning, everybody. Welcome to your daily Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers you Forex, but also the ability to trade energies and metals and stock indices from around the world and binary options for scalping and for hedging. Gul Modi. I'll be the leader of today's session focused on technical analysis. I've been trading Forex for over 10 years publicly. I've been around, I've done some things, and I've been in, I think, every market condition there can possibly be. Boom and bust, and then boom and bust again, and then boom and bust again. I've traded through 3 different chairmen of the Fed. And I'm like, wow, really? I'm a green spanner. I'm a green spanner. So let's do some technical analysis, huh? Let's go. Go, go, go. Now let me remind you that trading and investing are risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. But always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So how's your trading been going? Yeah, doing a little scalping. Very nice. Decent day, just shy of 100 pips. Good job, Timbo. You know, when you're in the summer months, if you pick up triple digits in a trading day, you should be very happy with it. Yeah, Bobby's got 100 over on the KeyCAD yesterday. Cool. Paul's got 98 pips on the pound yen. Very good. Just remind yourself, guys, that the market can giveth and the market can taketh away. Today, you know, recently there's been a lot of price action, but it doesn't have to continue. Also, we have our event risk of, you know, what the heck's going on in Europe. It's always a big question mark, isn't it? So, yeah, be careful. That's all I'm saying, right? All right. So I'm just looking at higher highs and higher lows. Seems to me Asia gave us a higher low, as indicated by the bottom of this channel. And I like to mark that. What do you think? Do you agree with that? So paying attention to that. No, not really making serious highs, though. So here, I've just got my little drawing tool fired up. So anyway, so seemed important. You notice this is a 618 Fibonacci retracement for a bull. Somebody obviously moved this back up in New York. Asia fade, 618, low plus 382 is a 618 or a bull. So I think that should be marked. Okay, now we are sort of consolidating a little more, but if it doesn't go up here, then I think what will happen is we'll be stuck in a range sort of in this area. Okay, but it's supposed to go up. What? And Asia is going to be buying it now, no? Right? Hello? We just started. We got 51 people in the room. No one wants to join in with a polite conversation amongst professionals. Well, whoever bought it there is supposed to buy it there, right? Right? Higher high, higher low. Wouldn't you buy it? Is there any support in there? Well, I have this as a psychological level of 110 as support. Okay, and then right here is the 382 Fibonacci retracement of yesterday's low and yesterday's high. That's the 382. We've already kicked off the 618. So it seems to me a bull would have to buy it. Make sense? So you have a couple of choices. If you're a bull, you should be on a 5-minute. You should probably already be long, to be honest with you. If you're a bear, I would let it break. Because the bear, you should have sold it way up here, right? So if you didn't sell it high, which I don't blame you because it's moving up, then you should wait for something like this. Now remember, I said if it does go lower, we're probably range bound. So to make it, instead of bearish, or let's say neutral, to make it bearish, you'd have to fail to get to the resistance, and then of course make a low, lower high scenario. And I think if we break this area, then the next level's here, right? So there would probably be a break, a retest, and then get it down to the next level. So by and large, I see this as an area of price action, and then an area up here, kind of thing. All right? So if you were planning this from a bullish point of view, you're expecting moves like this. Okay? And again, that's not, you can't, I wouldn't just say, well, because, you know, this was support and this was support, this has to be support. No, but the 382 and like level, oscillator is, you know, it's a bit early, but, you know, they're lagging. So then you drop into a Cinco, and right off the 382, right off the bottom of our channel, you got a 5-minute Stokes cycle. Came down, consolidated, for show. Maybe. That's all the same thing. Igor makes a good point, right? Daily central pivot. Okay, so the daily central pivot is at 109.98. All right, and you're like, that doesn't matter? Well, I already counted 110. I mean, what more do you want, right? So 110, okay, 109.98. Don't forget that. bottom of the channel, 382 Fibonacci, and blah, 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 blah. You have 99.53. Okay, well, I have 99.79. You're only talking the difference of a pip and a half, right? So, okay. And there we are. In the whole context of things. Today's low, yesterday's high, and so far we have a lot of price action, but a complete inside day. Been around the world and I can't find my baby. Let's move. Alrighty then. I'm loving this. This makes me so happy to see this coming down. Lovely. With your smile so warm and your teeth so green. All right. Just kind of backing out, looking at the context of things, right? Okay, can you see how that used to be a top? Let me get, oops, now it's going to, all right. Hang on, I really messed this one up. Dope. Okay, would you agree that that in the past was serious resistance? Okay. That's a 4 hour. Let's drop into a 15-minute. Oh, snap. Could be interesting, huh? So a bull should be looking for a reversal pattern somewhere in here. We got a monthly support, we got a weekly support, we have price action support. So if you were a bull and you were waiting and you got something, let's say like this, right? Maybe by the end of the day you'll be long. Okay? So what I'm suggesting is if you're a bull, somewhere in here you should be looking for a reversal pattern. That's all. If you were a bull, that's what you'd be looking for. It's even sort of setting up a micro inverse head and shoulders, but I don't want to read too much into it. Because what happens is, when you go shopping while you're hungry, you'll buy anything, right? So you're like, oh, that's an inverse head and shoulder. Don't worry about it. But, someone might buy it off the 21.5, but that's reading a lot into it. Okay? Igor doesn't get it. Well, let's go back to the 4-hour, okay, or even daily, because this zone used to be resistance, so it could now possibly be support. But I'm looking at it on a daily chart, so you got to give it some room, right? So if, okay, listen to this. If it reverses in here, it could be significant. If, that's called a trade plan. You see what I mean? If, then. I didn't say buy it. I said if it reverses here, you could be on, instead of a daily chart, you can be on a 15-minute chart. But imagine it on a daily chart now. Reverse here, it could be significant. But if you don't get a reversal pattern, don't do it. Just be ready. Have a plan, Stan. Say, you know what? It's been bearish for a while. There's been a lot of risk off regards to Greece. And this is a very interesting area in the past. It might play out again in the future. Now, it could obviously be even lower, right? Maybe we're heading way back down here. I hope it does. Because I'm going to buy it. I'm just not going to buy it in July. Unless I get a hardcore reverse pattern. Okay. You know what I did last year? I cornered the market on the Japanese yen. But I did it in August. Not July. So we'll see. Just pay attention is all I'm saying. Pay attention, have a plan. You know, a good book to learn fundamentals, learn fundamentals. Go take a college course in macroeconomics. You know, I'm licensed and registered. You know, I've passed the Series 3, so, you know, I know a lot about fundamentals, but I just took a college course. Why not? Nothing wrong with that. Take a college course on macroeconomics. At the very least, go to a university and buy the macroeconomic textbook that they're using in their class. At the very least, do that. That would be a good place to start. Yeah, I mentioned traded through 3 different Fed chairs. I remember when Ben Bernanke was nominated to take over after Greenspan, I said, you know, because obviously at that time I didn't know anything about central banking, but I knew that that was important. And I said, well, I don't know anything about this Bernanke guy. So I looked into his background. He was a professor at Princeton, and his specialty was the Great Depression, and he wrote several books. So the first thing I did was I bought a textbook that he uses at Princeton, and I bought one of his books that he wrote on the Great Depression, and then there's another thing that he published with some other people when he was at the Fed, and it was really difficult to read, but that's what I did. I'm like, I don't know who this Ben Bernanke is, but so I bought all his books. And this was before the financial crisis hit. I'm telling my wife, hey, man, hey, ma'am, hey, I said, anyways, I said, hey, it's interesting because this guy's specialty is the Great Depression. And I read all about it and the mistakes that the Fed made. It was really interesting. And then, boom, we had the Great Recession. I'm telling you, we had the right guy at the right time. Mostly because I think everybody saw it coming. But it's like, what do you do? What does the government do if they see an asteroid coming toward Earth and there's no doubt it's going to hit? Should they tell you? What? Nothing can be done about it. Yeah, call Bruce Willis. I like the way you talk. All right. Anyways, so that's got some potential. Remember, it's not, you don't do it now. You wait and observe first. You're already ready to go, right? It's all about setting up ambushes, guys. It might be tomorrow's trade. It might be next week's trade. Pay attention. Yeah, you are. Yeah, to get your affairs in order. I like it. For whom? They said when that asteroid hit the Yucatan Peninsula and wiped out the dinosaurs, that in about 2 seconds, the entire Earth was hot as a pizza oven. Yeah. It's kind of hot outside today. What is it? My cell phone says it's 700 degrees, but it feels like 850. But at least it's not humid. Mark asks what time frame is ideal for reversal patterns. I don't know, somewhere between 15 minutes and an hour, I would say. Yeah, well, then you're probably using frames that are too small, right? Or maybe you're not very good at a reversal pattern. What a lot of people end up doing is this, right? And so now they buy it, which is completely wrong. Because if the prevailing trend was down, bear is going to have this marked as a 618 Fibonacci retracement, and he's going to sell that. So if that's where you're longing it because it made the higher high, then you're just trading it poorly. Now, a lot of books teach it that way, but those are people that don't know how to trade. But I suppose if they say, well, if you had a 500 pip stop loss, But what you should do is come back and kick off of there, because now it's a 618 of your move from here to here, or a 382 of your move. So a bull, so for example, let's do it again. A bear is looking at it like this and would definitely sell. And a bull that was believing they were in a reversal zone would have done this basically, right? And the heads up was the break of the previous high, but the entry is the retracement back to that level, long and gone. So you're 382, not his 618. Does that make sense? Yeah. Well, but there are those that have been taught to just to do this. You know, once you've made the break, you long it. What you're missing is the context that the trend had been down. So that would be a very dangerous thing. Now, if you take the same pattern, but it's in the context of an uptrend, then it's a whole different situation. Right? That's why you shouldn't be selling here. Point exactly. Oh, sure. I thought I did, but let me do it again. So in the downtrend, right? I said this is not. It's not where you long. You don't long the break. Okay? You don't long the break, retracement to that line, and you go long there. So your long entry in a downtrend would be here. Okay? Because you're going to need you're going to need proof it's reversed. Because it could still come up here and still fall like a ton of brick. In fact, the odds of it falling are really greater because it's been falling. So you got to really have it reverse. And remember the key point. Wherever it reverses, you already expected it to reverse. So there's already some reason. You get it, guys? There's already some reason for it to reverse. And you're sitting there waiting for signs that it has reversed. Long. Boom. Okay? In the meantime, you, in this red zone, it could be pivots, psych levels, and price action. I don't care. But the thing is, this whole drop, you've been sitting there like, I want to buy it here, 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 I want to buy it. And then it reverses, gives you a reversal pattern. This is a double bottom with a 1, 2, 3. Take it. The pattern is irrelevant. Okay? If I broke trading down into pieces, the entire first book would be support and resistance. If you can't get support and resistance down, don't worry about anything else. Once again, Igor, your stop has to do with your trade plan, the strategy. Is it a spot? Is it a swing? Is it a scalp? I mean, all of that is just risk management. So I don't know. I don't know what you're doing. Okay, you could be scalping it off support, or you might be in it for the next 7 months. Okay, but really, if you're managing it seems hard to believe that you need more than a 33 pips stop. Sometimes it's 50. Now, my traditional answer when it comes to stop placement is my stop's always 50 pips away. Done. Next. Right? That's it. Now, so what you would do then is budget for a 50 pip loss on every trade. And then, of course, when you can move it, you should move it. You got to move it, move it. Okay? But if you say to yourself, if you said to me, you're like, Wayne, 50 pips stop? That's so huge. I would lose like a giant percentage of my trading account if I did that. Well, then you're over leveraged. Okay? So what is this? Our kitty cat? Yeah, time for a break. We got, well, it depends on, let's go to the other chart. Let's do this one. Just because we've used it so much. We hit our target that I created back in April. 1, 2, 2, 2, 2. Isn't that amazing, guys? Right in there. Bada bing, bada boom. Awesome! Yeah, from 121 to 128. And you notice the pattern? It's the one we just talked about, right? Then the consolidation. Then the breakout, retracement, right off the old resistance zone, gone. Now this is a 4-hour chart, and we just discussed something similar on the 1-hour chart. That's the same pattern. You can see I used the same stuff, right? The same analysis occurred back then. Once there was a break, let it retrace, continue up. You wouldn't buy it here because, see, again, a lot of amateurs will say, oh, it's finally broken. It's like 500 pips above the, buy it. Like, what? But you know, people do it. It's up 500 pips now. I think I will buy it. Holy smokes, could you be any slower, right? So you can't buy a high, can you? So you just simply, well, I'm a bull, so I need a retracement. Now, I had two plans, right, as you can see. Buy the 382, and the second one was buy the 618 off of the roll reversal. This could have played out too. Therefore, we had two trade plans. That's right, Igor. I don't think that actually got an entry. Because remember, when I planned this out, we were up here. All of this, when you see me drawing stuff, guys, a lot of this was done before it happened. Like you forget, like this orange line down and up, I might have drawn when we were sort of like in this area, right? Like we might have been, we might have been like that when I drew it. Okay? Like this one, we identified the break, and our plan was like this. And I don't think we predicted that, but I do remember when we were in these areas, like the blue line, what I'm suggesting is that we go from top to bottom to top to bottom until it breaks, but I know every time we hit top or bottom, we talked about the plan being let it break, let it retrace, let it break, let it retrace. Like we were all over this stuff, but we're never talking about what happened yesterday. We're always planning what's going to happen next. When you're at the top, you assume the range is going to hold and you're going to hit to the bottom. Then when you get to the bottom, you assume the range is going to hold and it's going to come to the top. But eventually, the range will break. I don't even care where or why. But it's when it does, you wait for the retracement long and gone. Wait for the retracement short and I can't think of anything that rhymes with short, but okay. And then if you kind of go into the micro analysis, you can see here, right? I don't know if you can read into this here, but when we're at the top, you see we're at resistance, and then I have this here, and the break and the retracement and down, so on and so forth. Here's a little short in here, down, up, down, right? If you look closely, there's lots of little trade plans in here. There was at resistance. This would have been very difficult to catch, but somebody really played the double bottom. There was a reversal pattern at resistance. There was a reversal pattern at support. There was a breakout retracement. This consolidation here, I would have expected it to happen in here, but nonetheless, just made it a little more bullish. Okay, and we played this. We played this area exactly the same way we played this area. Okay, and notice this is January to April. Okay, so what's going to happen next? It's going to come down here, and then it's going to go up here. That's the strategy. Okay, look, I just predicted the future. It could also do this. But we're not trending, so I'm going to assume the range. I don't assume breaks. None of this is complicated, right? So, if I were me, I would be looking for patterns that suggested such a move. Okay? Yeah, that USD yen is interesting, huh? It's almost there. Okay, take a look at the beast. Some nice trading. You see the break, retest, gone. Now, how many people watched that video I did about 10 days ago? Maybe even sooner than that, more recent than that. It might have been only 5 or 6 days ago. But I spent the vast majority of the hour teaching you how to swing trade. One very, 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 very simple swing trade strategy. How many people remember it? Igor, how could you do it 10 times and lost? In a row? Holy smokes, dude. I don't think I've ever done that. I'm not saying you didn't. Must have just been horrific trading conditions. It can happen, man. But what must have been happening is you were trading a trend. That's what it's in a range-bound market, and that sucks. I'm sorry, man. But you always have to ask yourself, what kind of conditions are we in before you start throwing down swing trades in the middle of a range, right? But, for example, this is a retracement between the 3A2 and 618 Fibonacci retracement. Yeah. So Igor, were you just throwing down limit orders, or were you trading like a 5A cross after the kick? Like, how were you doing it? Sometimes, and we've had a lot of fundamental and event-driven, high-risk kind of trading. So we're not in a normal time of year, like summer. Very, very rarely has a strong trend in it. And then with all the event risk around Greece and stuff like that, just we've had some sideways kind of markets or less than ideal. Like maybe it drops 100 pips, but what happens the next day? It's up 150 the next day. Well, that's not the right time to be doing a trend trading strategy. So, again, I feel bad that you lost 10 times in a row. It's the market, it's not you. Okay? But you should be ready when patterns happen. Like, for example, did we make a lower low? Yes or no, guys? Let's make it simple. Did we make a lower low? There's yesterday's low, there's today's low. Well, the day before yesterday. Yes. Good. What's the next thing you're going to do if we're trending? Sell the retracement. Now, the strategy that I discussed with you guys a few weeks ago was you identify the sweet spot, the area between the 3A2 and the 618 Fibonacci retracement, and that's the zone in which you're going to look to short. It's a continuation pattern. Okay? Yes, Marion. So similar to that. Okay, but now we're looking at basically all of yesterday's trading range, right? But I'll give you a hint. That's also how you trade the points. But for some reason, that just sticks to your brain a little better. Because what's the central pivot point? The high, the low, the close divided by 3. So the central pivot should be right about there. Newsflash, it made a lower low, sell it. Now, what's probably happened to Igor is we've been getting days where it makes a lower low and then it makes a higher high the next day. And, he blindly sold into what he thought was a downtrend, let's say, but didn't wait for a trigger. That's what happens when you use a limit order. And it's not a bad thing, because if it's trending very well, throwing down a limit order works just, 60% of the time, it works every time. But you do end up getting into trades you don't want, but also you sometimes miss trades that you do want. It's nature of the beast, right? It's a limit order, it's like that. So that's why I was saying, like, look, it came up, and then it did a 5A cross down. Notice also it's kicking off the 21. There's a lot going on here to make that attractive. It's behaving well technically. Okay. So what's the next move? I know I do this 100 times a day, so it's my job to do 100 times more. Right? What am I going to do? Sell it at 86.50? Not possible. Because I don't sell it at support. So I think you might have noticed we have now indeed made a lower low. So we set it up in April. Actually, probably even earlier than that. But April, that it'd go up to the 382 and then come down. April, and it happened to, what, the second or third week of July? All of April, all of May, all of June. So that's 90 days right there, plus a few. So that's 100 days in advance. 100 days! But it's too quick. All right. Let's move to, let's do Aussie. Baby, I've been knocking at your door. Do, 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 do. Hey, McDonell, clean up your charts. Yes, Mom. Okay. Let's put this into a context of a longer term setup. Try to figure out what my theory is. Try to figure out what my strategy is. I don't know. One thing I will say is we've hit the 1382. I would grow less confident now. I know we have it going down to the 618, but it doesn't have to do nothing. Okay? A 1382 is a good enough for a lot of people. And if it bounces, at 74, which we're hitting, it's within reason that it does come back and drop. Okay? But nonetheless, the basic strategy is there, right? It's called a swing trade. And that trade's been going on for about a month now. Cool. I have nothing really more to add. I mean, it's just that simple, right? So it's just, I think it's time for caution. Okay, maybe it goes down to 73, maybe it doesn't. Okay. And again, the price action is pretty straightforward. Okay. So you can see kind of we're in this area here. If it doesn't drop, then we're vulnerable to that reversal I was talking about. Okay. See, it's supposed to drop right here, isn't it? Right? So it's supposed to make a lower low right here, right now. And if it doesn't, uh-oh. Okay. Okay. What is it? Okay, Igor, what's on your mind? Igor N. Look at the 15-minute. This is a 15-minute. What do you mean up? Why would you say it's reversing? It seems to me it made a perfect 618. Now, if you are bullish because you did want to buy it at 74 and you believe it's going to go up, you're a bit aggressive, but you would look to buy it down here. So therefore, you would draw your fib the other way. Hang on, it wasn't supposed to be this difficult. Okay. So you'd wait for your 618. So you're kind of just hitting your sweet spot, and maybe it does this. But the oscillator says it'll be at least another hour before that happens. Okay. So you could do that. I'm a trend trader, so I would rather sell it off the 618. Okay. And when you look at the diverging central banking policies of these two nations, it suggests down. Okay. So I mean, but you already know. I mean, we already went through this days ago, right? Um, I'm a bear. I'm a bear. And in my humble opinion, I'm not interested. Even I guess even if it's up here, I'm not even interested. But that's where current resistance is, right? So if it falls here, it's heavy short. Heavy, man. Who's buying the Aussie? Now, granted, I think we're in this transitionary period where people have sold the Aussie for 3 years straight. Maybe it's time to and then traders have also mispriced the dollar. So it's kind of in a breather moment, I think. And I would probably start buying the Aussie dollar back maybe next year. So look, a lot of you guys want it to rise. I'm okay with that. Your oscillator's not ready, but you're just kind of starting to get into the sweet spot. Now, I always will do this. I'll just do that automatically. Boom. So it's going to be like a 50% to a 618. That kind of thing is what I would be anticipating. But if you get across to the upside, take it. Okay? But it still feels like low, low, right? Lower, high. It still, to me, feels extremely bearish. So you're kind of picking bottoms, you know? And I'm sure I have a picking bottom joke, but let's just say it stinks. It might be fun, but as a strategy, it stinks. I always remind myself that there's no glory in Forex. Do you think your broker's going to give you extra profit because you were able to get the exact bottom on the Aussie dollar? They're like, oh my God, Mark, that was such a trade. Oh, here's a little extra for your effort. Igor, whoa, that Aussie trade. Are you kidding me? Here's a little something, something for your, I mean, just, there's no way, right? So, like, why do you need to trade the reversal before it reverses? You know, that'll be the death of you, Igor. You got pride, my friend. Now, I have these long conversations. I have a family member that is quite religious. And he says pride is a sin. I'm like, there's no way pride is a sin. Now, you have pride, right? I think there's a difference between arrogance and pride. Pride, you take pride in the work you do, right? That's a difference between a worker and a craftsman, for example. A worker gets the job done. A craftsman stays to get the job done right and cares about things like the quality of the cut, the quality of the fit. And if it's not perfect, they put in extra effort. You know, in this case, it's like, imagine you're looking at your trading results with some sort of statistical analysis over the course of one full trading year. You're looking at things like risk-reward ratio, pain-to-gain ratio, maximum drawdown, average drawdown, peak-to-valley drawdowns, Sharpe ratios, Sorrentino ratios, and all these things that an investor would look at. None of that says, oh my God, he waited and he got the exact bottom on the Aussie dollar. Oh, that the 1382 and the 1618, those are Fibonacci's. Oh, and the other one, the lower one maybe, right, is what you're asking? So guys, if it's not in the statistics, it doesn't matter. See that? That's why I'm saying be careful in here. So guys, it doesn't say that you were in every reversal trade every time the market reversed. It's not in the statistics. It shouldn't matter to you if an investor would never see it. There's not sort of a quality analysis, and I'm not even saying it's a good quality to have, but let's say you're saying, well, because I just knew it was going to reverse. Well, I think in a lot of cases you're going to be wrong, and that's going to negatively impact, because you're buying in situations you should be selling, which means in situations where you're losing a little bit of money, you say, well, you know, my stop was close, I didn't lose a lot. Yeah, but you were supposed to make a lot. So in the situations where you're supposed to be making big pips, you lose little pips. Well, then, I don't know. It's just nobody cares but you, and the market doesn't give two hoots about you. So you need to stop caring, I guess. You need to care about other things. Perhaps. Right? I would suggest don't worry about picking bottoms, but whatever. So if you want to buy it, you need to pay attention to what's going on. Okay? That's it. And this 382 I think is important because we did a 382 to 1382, and that's my conservative target. Okay? I wouldn't be shocked if we went back to 75 before we dropped lower, if we do. So let's say from 74 back to 75, down to 73. That's cool, Pete. You know, I think what happened, Pete, is I probably learned how to communicate in a better way. Because I used to get that a lot, but I know in my heart I never was. But I know I used to rub people the wrong way, but that's just how I was. Yeah. I never, inside, I mean, there's one thing I know. Well, how about this? If you knew the other side of the story, you would say, oh my God, it wasn't a devil, it was an angel. I did some pretty nice things for a lot of people. But anyways, thank you for that, Pete. Okay? So if you're a bear, that's your scenario. And if you're a bull, that's your scenario. And here's the interesting thing. If you haven't long ago made any decision whether you're a bull or a bear, then you should just stay away. Thank you, Carmen. Well, that's another theory of mine that for some people I don't have a lot to work with. Now, some of you guys I've known for many years. But I don't always have that luxury of time. So let's say if this was our last hour together, I might as well give you the God's honest truth as plain and as bluntly as possible, and then go back over to make sure that you understood, and if you have questions, to address them. Because I might not ever see you again. I might not. That might be it for us. I've been contacted by spouses that said that this was back when they were paid members of FX Bootcamp, and they said, well, first of all, I want to tell you that my spouse, and I'm thinking, I think both times they were men. So anyway, so I get this email from a wife that says, first of all, my husband loved your service and would talk about it all the time and would attend every single day. But I regret to inform you we have to cancel his membership because he's passed away. Yeah. Just amazing. Yeah, that's happened a couple of times. You know, like the grieving widow contacts me to apologize because they feel bad canceling the service to boot camp because they know it was so important to their loved one. I mean, that's. Do you guys know the one about the wife that started trading his account while he was out of town? Do you guys know that story? Oh, it was a good friend too. He actually flew out to LA one time to just basically to meet with me face to face and stuff. And he tells me his story, and he's like, man, I've been working hard. I've been learning how to trade Forex, and been growing my trade account, and I'm just starting to feel confident. And then he says, I go away on business for 4 or 5 days, and I come back, and my laptop's open. I'm like, that's weird. And so he logs into his trading account, and it's all gone. But not because somebody withdrew the money, because the money's been lost. And he's like, what? Hey, honey, did you open my laptop and log into my trading account while I was out of town? Uh-huh. You did what? Yeah, I logged into your account. You what? So he divorced her. She blew up his trading account, presumably on purpose, out of spite. And he divorced her. For all I know, she's buried in his backyard. But yeah, he flew up to see him, and he's like, I'm out, man. I'm devastated. I guess so, Anthony. I think what he did was he left his laptop open, logged into his account. Yeah, I don't know the whole story. I don't know the whole story. I just know that was the end of their marriage. She blew up his trading account. Now, I'm sure if she did that out of spite, there might be more to the story. But anyways, guys, I've been doing this a long time, and I love hanging with you guys. So I'm glad to receive positive feedback. I guess he lost enough, Demeter. And I guess we're out of time already, man. Hey, I got something exciting to say. I'm going to leave the office today. I've decided to go golfing. Can you imagine? I'm going to go outside. I'm all excited. I'm going to go outside. Yeah. Yeah, so I'm going to get some sun on my face, and I'm going to drink some water, I think, which is another very unusual thing. Okay, just I'm getting a lot of questions about boot camp. I'll tell you what. Let me end the recording here, because this video and this session is for, obviously I represent TradersWay.com. This video is going up on Forex.today, but you have some boot camp questions, and so let me address those offline. Let me finish the video. I'll come back and I'll answer any questions you have about boot camp, because there are some changes there and all that kind of stuff. And, you know, that's obviously part of my history as well, and part of many of your histories. So let me answer some of those questions offline. And then I don't know, should stretch or something. All right, so anyways, thanks to TradersWay and to Forex.today. If you are watching this video, please leave a positive comment or a like. Really appreciate it.